For the Investing News Network, I am Brian McGovern here at the MJBizCon International in Toronto with Narbe Alexandrian, the CEO of Canopy Rivers. Narbe, thank you so much for your time today.
Pleasure being here.
Narbe, you just finished your panel talking a little bit about a global overview in the cannabis space. Can you talk a little bit in terms of what investors are asking you as a company that is looking at the market, constantly looking at where to invest, somewhat asking the same thing? Where should I be looking for growth in this space right now?
Yeah, we definitely see that there's a five-wave approach to how any geography is looking at cannabis. So at the beginning, when you're looking at a geography and they're starting to look at legalization, the cultivation extraction plays are probably the most profitable ones or valuable ones. Typically because licenses are scarce. So if you have one of these first licenses, you have a first mover advantage to build your facility and get to market. As time progresses and the number of licenses increase, that competitive advantage drops, and every new license that gets created has a lower value attached to it. The next wave we see coming in is the ancillary industry. These are the tech companies. These are the fertilizer and grow plant science companies that are coming in to make cultivation operate efficiently and frictionless. We typically see the ancillary industry being 3 times the size of the cultivation industry just because of the amount of supplies and software and technology that's needed to really power that. The third wave is consumer packaged goods. We believe that in the medium to long run, consumers won't look at the large public companies of what their names are, but rather they're going to be focused on what the product is called. So instead of looking at Canopy Growth, they're going to be focused on Tweed, and Tweed is going to be the company that the brand that they really focus in on. And those brands have to, in our opinion, go beyond being a serious catalog of just having a number of products on the shelf, but instead have a voice and have a story behind it so that consumers resonate with it and they can attach their values to what they're actually spending on the shelves. The fourth wave is pharma. We see pharma as being a gigantic play within the cannabis industry. Typically, this takes a little while longer just because clinical trials take between 5 to 10 years, 5 years if you have orphan drug status, 10 to 15 years if you're going down the normal path. Until that takes place, you're not going to see that many companies really pop up. And then wave 5 is going to be mass market. We believe in the 15 years from now, there's going to be 3 to 6 global players. They're going to gobble up a lot of companies through M&A, but they're going to be the global leaders within the cannabis space, and they're going to have the mind share and the market share for end consumers out there.
Something that you mentioned in your panel that was very interesting was this idea that the sector is moving away from the hype that was just announcing a press release saying we're going somewhere and stock jumps up. This is an idea that a lot of other analysts and investment portfolios have been talking about in terms that it's all about results now. There's no more hype coming. Would you say that that's something that the investors should really get used to now in terms of, with legalization of edibles coming up, with potential in the U.S., a lot of these big flashy announcements, it's still going to be all about results now when it comes to evaluating these companies and when it comes to the stock performance?
Yes, so I believe in the first piece of that question, which is the market has moved from being a voting machine to being a weighing machine. So instead of, when I mean voting machine, it's not about press releases and how many press releases you push out now. It's more about what the content of it is, and it's actually backed by actual results. And results really count more now than just hype around the company and promoting the company. So we are definitely seeing that trend. I do think that the market is prematurely looking at profitability. This is a very large greenfield opportunity across the world. A lot of geographies, whether it be California or Canada, are still encumbered by illicit sales of cannabis. And as that moves towards legal sales, and as we have intenders and rejectors moving to becoming consumers, this industry is going to grow very rapidly. So right now, looking at profitability means that you're basically taking 30% of your profits and giving away to the government in terms of taxes, which I believe it should be the opposite way around. You should look at it from the technology company perspective of building top line and creating and building assets globally to capture market share, and not necessarily looking at profitability this early in the game, because you just need to go as fast as you can at this point in time and not necessarily look at how to turn it into profitability unless you have to, which would be if there is a global downturn from an economic perspective.
Yeah, you mentioned this obsession with profits, and it feels almost as that's been one of the driving factors for the investment shift into the multi-state operators down in the U.S. from the public sector, a lot of obsession with growth as well. But, you know, it almost feels like a reckoning time for a lot of these Canadian names that have been promising major results for a while now, and investors may have been getting caught up too much with that and now expecting after legalization that everything was going to start to pan out that way. But like you mentioned, it takes a lot of time. In your latest quarterly update, you mentioned that the company is still expecting to see net losses moving forward as these investments advance. Is that something that you have to deal with a lot with your investors in terms of reminding them it's not about profits right now? And what are the kind of metrics that you prefer investors look at right now?
Yeah. So again, I wouldn't really stress the profitability perspective yet. For all of our portfolio companies, we make sure that there is a plan in place to pivot into profitability if need be. So if there is, God forbid, a global downturn in the economic cycle, which might happen sooner than later, many of our companies are well positioned to just turn off the marketing tap or the sales tap and turn into profitability. So we always want to make sure that switch exists for companies. And I think that's super important, especially when capital dries up in a recession. However, in the grand scheme of things, profitability isn't the number one criteria that we're looking at. We look at how can whatever company it be, whether it's cultivation, extraction, technology, or brands, become a global leader. And what do they need to do to get there? And you don't want to encumber them by telling them that they have to move into cash flow positive territory too soon. Instead, you want to unleash them and allow them to grow that top line, but always have in the back of your mind an ability to turn into cash flow positive or profitability come a certain point in time.
As a last thing, when it comes to the Canopy Rivers plan and strategy moving forward, you've obviously talked a lot about TerraSend and its place in your portfolio. Can you talk a little bit in the big picture mode? What are your kind of goals for the company moving forward into 2020 for TerraSend? I mean, specifically when it comes to the U.S. cannabis market.
Yeah, so TerraSend is one of our most successful investments to date. They have an all-star group of management team that's looking at cannabis not only in the U.S. and Canada, but more broadly globally. TerraSend is the only company right now that sells in Canada, the U.S., and Europe, and really proud of all their achievements that they have in place. Their outlook is going to be the same as many other companies out there, which is capture as much greenfield opportunity as you can and grow globally. TerraSend's their operating team is lights out, some of the best that I've seen. They're persistent. They understand the data. They are very data driven in how they look at the industry, and they have a pharma background, which really lends well to a growing cannabis company. So my prediction is that TerraSend will likely be one of the largest, top 5 largest MSOs in the coming year, multi-state operators in the U.S., just because of the way they are being smart about their acquisitions and the way that they're focusing on not just the acquisition itself, but the integration of the company and their larger company and how that fits into the whole picture for their investors.
Okay. Narbe, thank you so much for your time. From the MJBiz International Conference in Toronto, I'm Brian McGovern. Thank you.